So I'm just sitting around and looking at the historical valuation based on EV by EBITDA for Tata Steel. Now some things may be very obvious when you see this chart, which is that if you're well above 2 standard deviations, well, that's overvalued. When it's close to -2 standard deviations, then it's undervalued. And the same thing can repeat over here. But there are times when we've crossed the 2 standard deviation line by a much bigger margin than we did here. There are also times when prices do tend to bottom out very close to 1 standard deviation. It almost happened over here and then prices went up. Now, how do we really know whether those are good entry points from at least a near-term investment perspective, if not really long-term? Because extreme points like this definitely are long-term investment points where you get in and you think about the next 5-10 years, but there may be many entry exit points in between, and how do you really gauge those? And that is where I think the importance of looking at valuations in combination with momentum becomes one of the most significant things that you can actually do. And this is what we've actually ended up doing here on Strike. You just don't have the charts of all the historical valuation metrics here on the left, but you can actually go and look at a valuation chart in combination with momentum. So you simply go to charts and open the Strike valuation setup. Okay, and when you do that, what you will end up seeing is Tata Steel's valuation along with the momentum. And now when you're clicking on 1 year, you're seeing daily momentum. Now you want to take a slightly longer term view. You'll go to the 5 year and weekly. So basically when you click on 5 year, it shows you the weekly momentum. And if you want to take a slightly wider view, you can very easily go to 10 years, which is what we were really looking at earlier when we were looking at EV by EBITDA, and we can actually choose that. So here it's automatically chosen the recommended EV by EBITDA as a valuation metric, and it's plotted the RMI along with it. Now this is the monthly RMI, which gives you two broad entry points, and these two broad entry points are where you got a buy signal here, and then you got a buy signal here much more recently, and of course there's a last buy signal here. So sort of it told you, okay, get in here, get out here, get in here, and then get out here again, and possibly get in again. But this only captures the big terms, right? Big ones which occur once in 3-4 years. What about the ones in between? So after you open a 10-year chart where we have by default plotted the monthly momentum, you can easily switch from monthly to weekly. What that will do is it still keeps the 10-year valuation chart on the screen. Okay, and you just zoom out a bit. But what you see now is you're actually looking at the momentum on the weekly. Okay, so when you're looking at the momentum on the weekly, what you end up seeing is the valuation actually hitting those 1 standard deviation bands as well. Okay, and when you hit those 1 standard deviations, then what do you do? So whenever it reaches this dotted green line, okay, not the lowest line but the dotted one here, and you get a buy signal in the weekly RMI, that also ends up being a good entry point. So you don't necessarily have to wait for 2 standard deviations. So here you came very close to the lower green line, and if you actually looked at this, you got a buy signal here on the weekly RMI, and that could also have been a good entry point down here, and then many other, because but you're looking for those specific ones where you combine the two. This one doesn't combine, so this is a much later signal that is really coming. And so by doing this, by simply switching to a weekly chart, even when you're looking at a 10-year valuation, you can actually look for entry points at the 1 standard deviation point as well. So this is an interesting addition to what we discussed in the weekend webinar, and I hope it helps you when you're really trading stocks long term. Thank you.